We're TTB, the Alcohol and Tobacco Tax and Trade Bureau.
Hello, welcome to TTB Bootcamp for Wineries Records. This segment of the series will provide an overview of types of records, requirement, and common compliance issues regarding records, wine commodities for industry members. The slides for this presentation are available on the Bootcamp page at ttb.gov for future reference material. First, our disclaimer. This presentation is not intended to establish any new guidance or set forth any new policy. Our goal is to help you understand the laws and regulations administered by TTB. Also, the information we're sharing today could at some point be superseded and become outdated, so always consult the most recent regulations for current requirements. Let's look at the typical TTB touch points for wine industry members. You start by qualifying as a bonded winery, wholesaler, and/or importer, and obtaining a TTB basic permit. Once you know what type of wine you would like to make, you would apply for formula approval if needed. You would then produce your wine products and keep the required production records. Once you know what you want to put on your label, you would apply for label approval or exemption if 7% or more alcohol by volume. You are now moving to the bottling and removal phase, and be sure to keep timely and accurate bottling and removal records. Next, you would file your operational report. Then file your tax return and pay any applicable taxes. Keep in mind that you must timely report any changes to your business after original qualification. This is typically done by submitting an amendment to your permit with that change. Here's a look at what we will be covering in this presentation. We will start with the records overview. Then we will move to the types of records you will need to keep and finish off with common compliance issues relating to records and record keeping for wineries. There are required Internal Revenue Code and Federal Alcohol Administration Act records. TTB requires proprietors who conduct wine operations to maintain records for several reasons. For the IRC, records are primarily required to substantiate tax liabilities. For the FAA Act, records are primarily required to substantiate label claims. Records are also used to prepare your report of operations and excise tax forms. Both the FAA Act and the IRC have production definitions, standards, and limitations that necessitate the proprietor to keep records. Yes, record keeping matters. Required records must be maintained at the wine premises. However, if records are maintained in a computerized format and source records are kept at the premises, the proprietor may keep records at another location, but they must be made available within 5 days for TTB review. Photocopied records are treated as originals. The regulations dictate the time for making entries. Operations or transactions generally must be entered in records at the time the operation or transaction occurs. If records are posted from source records, for example, completed work orders, or from supplementary or auxiliary records prepared when the operation or transaction occurs, entries in another record may be deferred for up to 3 business days. All summary records are posted from source documents of the individual transactions. The regulations also lay out the rules for retention of records. All records, including source records and reports, must be retained for no less than 3 years from the record date or the date of the last entry, whichever is later. If necessary, TTB can require a proprietor to retain required records for an additional period not exceeding 3 years. Wine premises proprietors are required to maintain a TTB file in complete and current condition, readily available at the wine premises for inspection by TTB. This file must contain the following information: all original qualification documents and subsequent amendments, a copy of the bond if they have one, and a copy of all trade names registered with TTB. This graphic depicts the flow of operations from receipt of grapes to removal and the required records along the way. For example, we require a record showing the purchase, receipt, and disposition of winemaking materials, but these materials would also show up in the bulk wine records when they are used in producing wine. We talked about bonded wineries sending either juice or wine to another bonded winery for custom crushing. If the disposition was wine, when it gets sent to the bonded winery, this would be a transfer in bond. This will be shown on the right hand of the screen and would require a record. If it comes back to the original bonded winery prior to tax payment, this would be a receipt in bond. This is shown on the left hand of the screen, and again requires a record. For a custom crush arrangement with a wholesaler, when the rind is removed, it would be a taxable removal. This is shown on the right hand of the screen and requires a record. We will go into detail regarding the requirements of some of these records. Let's start with wine materials received and used records. Receipt of materials and production record. This record includes weight tags, invoices, trucking and delivery documents, and receipts in bond. They must include date of receipt, quantity, from whom the materials are received, date of use or other disposition, BW number if applicable, and must contain information that supports eventual label statements. Now let's move to the bulk still wine record. This is a summary record maintained to record transactions in bulk still wine. This record is required to be maintained by tax class. The bulk still wine record must contain, if applicable, the volume produced by fermentation, the volume received, shipped, tax paid, removed, and used in sparkling wine production, the specific type of production method used, the volume of wine used and produced by amelioration, additions of spirits or sweetening, the volume of wine used for and produced by blending of tax classes, the volume of wine used to produce formula wine, vinegar stock, and distilling material, and the volume of wine removed to fermenters for re-fermentation or removed directly to the production facilities of a distilled spirits plant or vinegar plant. Information from the bulk still wine summary records feeds directly into Part 1, Section A of the Report of Operations. These records that we request to see are either to confirm the entries on the Report of Operations and in turn the amount of tax due, confirm the label claims, or ensure consumer safety. Each record has a purpose. To reiterate, permittees may create and maintain their records in whatever format is most convenient to them if the information can be verified by TTB review. A first-time investigation can involve asking the industry member for a wide variety of records. This slide shows how each required record falls into the TTB Form 5120.17 Report of Wine Premises Operation. As you can see, every record shown here is a part of the flow of how wine is received, processed, and removed at a winery. The required wine production records are as follows: effervescent wine record, formula wine record, chaptalization and amelioration record, sweetening record, distilling materials or vinegar stock records, non-beverage wine record. Keep in mind that you may not make a sparkling wine or a formula wine, so these may not be applicable to you. The required winemaking material records are spirits record, sugar record, acid record, carbon dioxide record, chemical record, decolorizing materials record, allied products record. Keep in mind that not all these records may apply to the types of wine product that you make. Let's move on to the bottled and packed wine records. These records typically include a summary record maintained by tax class and documents the volume received, bottled, and removed. This includes certificate of label approval serial numbers and the results of fill and alcohol tests, which are required by 27 CFR 24.255D and E. Keep in mind that the alcohol tests must be taken before bottling. The fill samples must be taken at representative intervals, and this needs to be documented on the bottling record. Now we are going to talk about the label information record, which must give accurate and sufficient information for verification of the label claim by TTB examination. A proprietor who removes bottled or packed wine with information stated on the label, examples are varietal, vintage, appellation of origin, analytical data, or date of harvest, is required to have a complete and accurate record trail so that the information appearing on the label may be verified by a TTB investigation. The record trail must run from the beginning source material to removal of the wine for consumption or sale. Typically, there will be a wine trace that is conducted on site, which follows the wine from grape to bottle. The records needed for label claims must be readily available and complete. Information about the pedigree of the wine must also be included on any transfer in bond record. Wineries must keep records of tax paid and untaxed paid removals from bond. Records are required at the time of removal for wine removed to tax paid wine premises, tax paid wine bottling house premises, and for direct shipment. These records must include the date of removal, name, address of the person to whom shipped, volume being shipped in wine gallons to the nearest 10th gallon, and the class and type of wine and the alcohol content. Here are some tax-paid removals that require records. Wine removed for tasting room, non-bonded, direct-to-consumer shipments, sales to wholesalers, removal to off-premise locations, inventory shortages, removals for promotional events, and removals for charity and donations. Now let's move to the untaxed paid removals requiring records. These would be removals for occurrences like testing on and off premises, tastings on premises in bond area, for family use, 100 gallons per adult up to 200 gallons annually, destruction and breakage, official use of the government, TTB samples, transfer in bond, export out of the U.S., and allowable losses. This includes losses due to theft, fire, and losses in transit, not to exceed 2%. This also included losses due to spillage, leakage, soakage, evaporation, racking losses, etc., but these usually are only at a 3 to 6% allowable loss. Please refer to 27 CFR 24.266 for more details. Now let's discuss the transfer and bond record. A proprietor who transfers wine in bond shall prepare a transfer record. A shipping document or other form of written transfer can be an acceptable transfer and bond record if it contains the date, name, address, and registry number of the shipping and receiving wine premises, volume in gallons or liters, kind of wine, the class and type, and alcohol content or tax class. It must contain serial numbers of cases or containers over 4 liters required to be included in the transfer document, and complete and accurate label information. The proprietor may remove samples of wine or wine spirits free of tax for analysis or testing purposes. This is limited to 1 liter per lot. The record for this removal should include invoices, billing statements with details about the wine, such as size, kind, date of removal, and the name and address to where the samples were sent. These types of tax-free samples or residues may not be consumed or sold and must be destroyed after testing or returned to bond. For a list of certified labs, please see the link shown. For testing on premises, the proprietor may take samples of wine or wine spirits free of tax for analysis or testing on bonded wine premises. The proprietor shall maintain records showing the size, kind of wine or wine spirits, date, and disposition of each sample retained as a laboratory specimen. The label of each sample retained as a laboratory specimen will be marked "Sample for Analysis Only" and will show the kind of wine or wine spirits. For tasting on the bonded premises, the proprietor may take samples of wine free of tax for organoleptic tasting on bonded wine premises. If a room or area is set aside for public tasting purposes, a record will be maintained showing the date, quantity, and kind of wine transferred to the room or area for tasting. Now let's discuss tax-paid wine storage records. This record is required when tax-paid wine is stored on the bonded wine premises and must include a record of receipts with the name and address of the person or wine premises from whom received, the registry number, if any, of the wine premises from which received, the date of receipt, the kind of wine, class, type, and, in the case of foreign wine, country of origin, alcohol content or tax class of the wine, and the volume of wine received in liters and gallons. There also needs to be a record of removals, which must include the name and address of the person to whom removed. However, on any individual sale of less than any liter, the name and address of the purchaser need not be recorded. The date of removal, the kind of wine, class, type, and in the case of foreign wine or a blend of United States and foreign wine, country of origin, and the volume of wine shipped in liters or gallons. Lastly, you must have a record of cases or containers filled, and this must include the date the cases or containers were filled, the kind, class, type in the case of foreign wine or a blend of United States or foreign wine, the country of origin, of wine bottled or packed, the number of the tank used to fill the bottles or other containers, the size of bottles or other containers, and the number of cases or containers filled, the serial number or date of fill marked on the cases or containers filled, and the total volume of wine bottled or packed in liters or wine gallons. When exporting untaxed paid wine out of the United States, be sure to use TTB Form 5100.11, plus provide proof that the wine left the United States. Tax must be paid if proof of export is not obtained. When exporting tax-paid wine out of the United States, be sure to use TTB tax drawback forms 5120.24 and 5120.20 plus proof of export. Please see Industry Circular 2004-3 Alcohol and Tobacco Export Documentation Procedures for more information. You may apply for a variance for export documentation. This variance, if approved, enables you to maintain export documentation on the premises instead of forwarding the documentation to the NRC. Please keep in mind that if documentation is not obtained within 90 days of export, tax is due on that export. You must provide evidence of exportation. Exportation of any shipment of distilled spirits or wine may be evidenced by a copy of the Export Bill of Lading, 27 CFR 28.250, a copy of the Railway Express Receipt, 27 CFR 28.251, a copy of the Air Express Receipt, 27 CFR 28.252, a copy of the Through Bill of Lading, where exportation is to a contiguous foreign country, 27 CFR 28.250, or a certificate by the export carrier, as provided for in 27 CFR 28.253. Please see 27 CFR 28.40 for more information. Let's move on to the tax-paid wine return to bond records. A proprietor shall maintain a record of any tax-paid wine returned to bond as follows: the kind, volume, and tax class of the wine, with regards to each tax class, the amount of tax previously paid or determined, the location of the wine premises at which the wine was bottled or packed, and, if known, the identity of the bonded wine premises from which removed on determination of tax, the date the wine was returned to bond, the serial numbers or other identifying marks on the cases or containers in which the wine was received, and the final disposition of the wine. Let's talk about inventory records. A proprietor who files monthly or quarterly reports shall prepare a record of the physical inventory of all wine and spirits in storage. Such proprietors may use an annual inventory period different from the period beginning July 1st and ending June 30th by submitting a notice to the appropriate TTB officer. Proprietors who file reports on a calendar year basis under the provisions of 27 CFR 24.300G shall take the physical inventory at the close of the calendar year. The inventory record will be retained on file with the proprietor's TTB form 5120.17, report of bonded wine premises operations, for the reporting period when the inventory was taken. The inventory record must include a description of the wine, which includes stating the generic name, for example, port or claret, or designation as a white, rosé, or red table or dessert wine, or if the wine is intended to be marketed with a vintage date, varietal name, or geographical designations, those will be appropriately identified. For example, 1997 Napa Valley Pinot Noir. And if the wine is other than grape wine, stating the type, for example, orange or honey. For bulk containers, tanks containing wine will be listed by tank number. Bulk containers, which are barrels or puncheons containing the same kind of wine, may be summarized, for example, as 10 barrels red table wine 500 gallons. For cases, bottles, and other similar containers, the total volume of one kind of wine in cases, bottles, and similar containers may be entered as one item and appropriately identified. For inventory summary, the volume of bulk and bottled or packed wine will be totaled separately in wine gallons or in liters by tax class and reported on the TTB Form 5120.17. Spirits will also be totaled and reported on the TTB Form 5120.17. Please remember that the inventory record must be numbered consecutively, and the last inventory page will be dated and signed after the statement. Under penalties of perjury, I declare that I have examined this inventory record, and to the best of my knowledge and belief, it is a true, correct, and complete record of all wine and spirits required to be inventoried. Unexplained bottle shortages must be tax paid. See 24 CFR 24.266C and cannot be offset by inventory gains and must be reported separately. Any claim must be filed for excessive bulk losses. See 27 CFR 24.266B for further information. What is the importance of record keeping? Records are key for completing your TTB Form 5120.17, Report of Wine Premises Operations, and your TTB Form 5000.24, your Excise Tax Return Form, which is a requirement of 27 CFR 24.323. Additionally, records ensure accurate reporting for wine production, storage, and excise tax calculations. Some of the common compliance concerns we see are alcohol and fill tests are not being done and recorded, transfer and bond records are not accurate, operations are not recorded timely, cellar records are insufficient to support label claims, insufficient label information on transfer and bond documents, and annual inventories are not taken, recorded, or reported. We hope this information helped you better understand TTB and the work that we do. If you have questions, please don't hesitate to reach out to us through the division-specific phone numbers, web forms, or email addresses that we provided throughout the presentation. To stay up to date on the latest TTB news and updates, we encourage you to sign up for the TTB newsletter. You can do this by searching for TTB newsletter in your favorite search engine and then click subscribe to TTB newsletter. Thanks so much for watching, and make sure to check out the other segments in our Bootcamp for Wineries series available on ttb.gov.
Visit TTB's official YouTube channel at USTTB.gov for more TTB-related content. And remember to click subscribe so you'll always know when we upload new videos.